Should I open it in Safari?
Turn it up, let it ride. Yeah, the option pod.
Mick and Mike, yeah, they on the air. Breaking walls with that crypto flair. Deep dives roll, yeah, minds aware. Good vibes float everywhere. Tapping now, yeah, the stream go live. Big ideas, feel the energy rise. If you here right now, then you ride on time. Welcome to the future, enjoy the ride. Hands up, yeah, let it low. Sound check, let the people low. Check, yeah, feel the vibe, let the beat unfold. When it drops, yeah, the story told. Adoption pod, yeah, here we go. Crypto flows, let the knowledge grow. Breaking chains, watch the future glow. Adoption pod, they run the show. Let's go. Yeah, da 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 da. Da 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 da. Yeah. Yeah. Pioneers with minds so bright, lighting paths in the crypto night. Questions fly, answers ignite, changing lives left and right. From the blocks to the blockchain age, real talk when they hit that stage. If you're learning something, then mission complete. Mass adoption start with a seed. Option pod, yeah, here we go. Crypto flows, let the knowledge grow. Breaking chains, watch the future glow. Adoption pod, they run the show. Blocks are building, truth reveals. Digital world, a brighter field. Yeah, masters learning, wounds are healed. This is the future, the deal is sealed. Locked in, adoption pod. Yeah, here we go. Crypto flows, let the knowledge grow. Breaking chains, watch the future glow. Adoption pod, they run the show. Run it. Adoption pod. Adoption pod. Adoption pod.
Yo, welcome to another episode of the Adoption Pod. I think Mick is here.
I'm here. I've like made myself leave the room about 17 times trying to get my camera to work. I think I'm on a wrong browser or something. So I asked Mike if he could put a cool sticker over my face.
I don't know if I can do that. I'm gonna try. I'm actually just I totally spaced out, and I gotta get our arena stream going here. So, classic.
There's been a lot of technical difficulties. We'll just say that.
Classic arena. You always have to reset the streaming key to get it to work. For some reason, I don't know why, but it's such a quick thing. I've gotten so good at doing it that it's so quick now. And we should.
I'm impressed.
Momentarily, boom, we're up. Look at that, we're live on arena.
Wow. Our resident tech expert.
Wow. Yes, I operate pretty good under pressure.
Yeah, I clearly do not. So,
well, hello again. Generic picture of a like MSN person.
Yeah, can we spice this up a little bit? What's this? Can I tip you? I think I can tip you.
Hey, go.
It's totally different on mobile. I don't know. I'm lost.
Yeah, you got to be using Chrome, and you got to make sure you accept all the permissions in Chrome for camera and microphone. So we'll try that. We'll get Chris up here, and we can have a discussion while you figure out your tech issues.
Okay, that sounds good.
What's going on, Chris? Welcome to the show. How you doing?
I am well. Thanks for having me, guys. It's an honor to be here. I've watched your shows quite a few times, and it's just cool to be. I think we all met briefly in New York last year.
Yeah,
permissionless. That was fun.
I can't believe we haven't had you on the show yet. I felt like we had before, and this was a repeat. But it's like everything gets blurred in my head these days.
No, we've interviewed a lot of Chris's. I was a little confused. Wait, what Chris are we talking about again? But yeah, I remember as soon as she said Chris Soriano, I'm like, oh yeah, we met in NFT NYC, right? Right by the there's like an AVAX event going on right where we were at. And it's pretty awesome.
Yeah, it was a good time. Yeah, it was brief but memorable.
Yeah, absolutely. No, we had a great conversation. It was nice to hang out. So tell me about you, man. Tell me about Beacon DeFi, and what you guys are doing in space.
Yeah, so my name is Chris Soriano. I'm the co-founder at Beacon DeFi. I'm also an online content creator known as a DeFi professor. And basically, Beacon DeFi, which just turned 3 years old yesterday. Woo, yay for us. Happy
Woohoo!
about
Sorry, I keep looking for hearts to press on this, and there's none. So I'm just gonna have to interrupt and say, "Woo!"
No worries. No. So what we are, we're an education and onboarding company. That's our specialty. So we help everyday people. Our mastermind is specifically targeted towards high net worth individuals, but we have a free community as well. And we're here to make DeFi accessible and just help educate people on what the future of finance, the future we're going to be doing business is, which is decentralized finance, where this is the year where TradFi and DeFi are going to combine into just what's Fi at this point. So, we've been doing this I've been doing this for roughly about 5 years now. I've helped tens of thousands of people get into DeFi, just everyday people off the street. People come to me and say, "Hey, Chris, I have some Sol, I have some ETH, I have some BTC. Can you help me earn some return, some passive income on that?" I'm like, "Absolutely. Sit down, join one of our cohorts, and we'll help you get through." So that's really just kind of been the long and the short of what we've been doing here in this space for the last 5 years. I do live stream 3 to 4 times a week. We have a podcast that we do every Wednesday and a podcast we do every Friday where we talk about both the news as well as educate everyday people on, just very basic concepts on security, on, how to get into the space, what's a CEX, how do you start your first, yield bearing position in this space, what are the different types of ways to earn money in this space. A lot of people, we're here obviously to make money. That's kind of the first and foremost, as much as most of us are here for the tech. Most of us want to make money, and that's why we're here, because this is a different way that we can do so. So it's all about, preaching self-custody, but also being safe and secure. And that's pretty much the basis of what we do at Beacon. We're out putting out educational content, working with different protocols and blockchains to help drive liquidity, drive attention, drive educated eyeballs to what they're doing.
So is Beacon DeFi a platform where you can take your crypto to earn yield, or is it an education platform?
It's an education platform. Yeah.
Okay.
So we have a school site. That's our main site right now, mainly because when we actually acquired the IP that I created, because I originally was with a company called yieldfarming.com, and they decided to go a different route. We decided to, acquire all of our assets, me and my 3 co-founders, and we rebranded as Beacon in May of 2023. And it's just basically you get access to us. We do weekly calls, member calls, and we also have courses, and we walk people through exactly how to get into their first positions here and create a portfolio of yield bearing positions that does very well for them. Just to speak on Mick, we've had Jose on our podcast a couple of different times.
Yeah.
We've talked about how to get started with perps, and my goal is really just to be a translator, because a lot of what we're doing here is a foreign language to a lot of people.
Yeah.
So having someone who can help
Your translation layer between the normies and the giga brains.
Exactly.
So I do have a question, Chris. I
Yes, of
consider
course.
myself somewhat of an expert on DeFi hacks since listening to A16Z's 30-minute rundown on recent DeFi hacks. I'm not an expert, obviously, but I am very curious to hear your thoughts, because this has become a very big problem in the last 6 months. Over 700 million hacked. Kind of when I was listening to the A16Z podcast, at first, of course, it's probably North Korea, but that, jokingly, it could be 1 gigabrain in North Korea doing this stuff, but more than likely it's a lot of, just the acceleration of AI and the rate at which we can find and exploit these vulnerabilities. But I think that the tone that they're trying to set is that, hey, we have all the same tools the hackers are. So why are you not proactively trying to hack the crap out of your own protocol and close those holes before someone else finds them? So where do you come down on this? Why is this such a huge problem? Do you think it's like region specific? And what do we do to protect ourselves as businesses? But then also, how do you as a trader decide where to put your money? Because there's lots of different options, right? Some places pool liquidity and you're all at risk. If something happens to the protocol, your money's gone. At DeFi app, at VDEX, we use Vipes, their participant escrow private vaults, right? So you're a little
Right.
bit safer in that regard, but there's still some risk there, obviously, but not as widespread. So where do you come down on educating both your community on the latest DeFi hacks and then also businesses? What advice would you give for them?
No, that's a great question. So the one thing that we talk about, especially in our content, is the whole purpose of how we stay safe is to not overinvest in any one protocol. We take a very measured, uh, allocated approach. Like we make sure that when people are looking into creating an investment plan, which is the output of their first 30 days in our program, what we call our lighthouse journey. It's about creating a really smart plan where you have your assets and your strategies in different risk buckets. We think risk is probably the easiest way to allocate, mainly because that way you have true choice over what you want to do. If you want to go and be totally into SHIB or Doge or XRP, do that. It all depends on what you consider your long hold assets, and then having a portion of medium risk assets along with high risk assets and then stable coins and in any formulation that you want. As long as you have it in buckets and you also are doing it so you're not over invested in any one DeFi protocol, right? When we're looking at CEXs and DeFi protocols, they are different because your keys, someone else's crypto at a CEX. So there's that piece, but probably really good security at something like that. Now, that doesn't mean that they're perfect, right? We saw what happened to Bybit. There are reasons that you can actually lose a lot of money at a protocol like that. But with what's been happening with Lazarus and all of these different groups that are out there that are probably all affiliated in some way, is that they're attacking a lot of I guess you could say breadcrumbs that were left open. I think that from a smart contract perspective, the great thing about DeFi is that it's for the most part self-healing because code is law in this space. So that as more exploits happen, it actually strengthens and hardens the base. So it makes it harder and harder for new exploits to happen. In fact, for what happened with KelpDAO, they actually went with off-chain infrastructure. So they started looking for different points of access that are not as safe, or just the security is not as good. So one thing we tell everyone is to, especially in the world of DeFi, because we don't have the safety nets down here that we do in, let's call it the real world, right, with FDIC and stuff like that, is just not to overinvest. So in the event that you put some of your money in a protocol, let's say Aave, for example, you don't put too much in there. You go into different protocols just to make sure that if something happens, which is what we call counterparty risk, right? Counterparty risk is probably the biggest thing. Is you're
Americans aren't used to all those options though, right? You used to just have the bank. And if you think back, like I was thinking while you're talking, is like, yeah, there's these exploits and risks, and everyone's like, oh, DeFi is not safe. Banks used to just get robbed all the time, and there was no FDIC backing. Like your money was just gone. Like this is just the evolution of currency, and at every turn there will be some risks. And I wish we could find a way to talk about that as a normalized growing pain for new technologies, as opposed to like vilifying crypto for this bringing out the worst in all people, because banks, we have historically tried to take money that isn't ours, and whatever medium and whatever format we try to store money in, people will come try to exploit it. It doesn't matter, right?
Yeah. I think we have a hurdle though, because you talk to people about finance, and like, first of all, people don't like talking about money. People have a lot of emotions tied to money, and it's really hard for people to talk openly about their own finance. I feel like people avoid it, to be honest. Like they do whatever they can to avoid it. And when it comes to, you're talking about yield and all these different things, everybody just, at least in my personal experience, my personal life, when I start talking about finance, stuff like that, people just want, I'll put my money here, just let it sit for 20 years and not be a participant in growing their wealth. And obviously that's the wrong way to go about it, because you have to be an active participant. You got to be there and I wouldn't say actively manage, but be on, if you buy a stock, you got to maybe have an idea what the news is going on with the stock or how the company's doing. Like you don't have to go into the weeds, but have a general idea of what's going on. And like, how do we get people to talk about finance and get this, because it is a learning curve. It's not easy. It's a little bit more difficult, and people got to put a lot more work in. But if you want to get ahead in life, unfortunately, that's the only way you're going to do it, by putting the work.
Yeah, I do think so we're looking at neobanks right now, right? So crypto cards that are KYC that you can use with, funds on different chains. As we start to make the UX and the on ramps and off ramps easier to understand, I think that's where the better adoption is going to come from. I know people are talking about clarity and people are worried about the whole cypherpunk portion of it, but let's be honest, we're not going to get a ton of people using this technology if they have to bridge money across 9 different spots each and every single time, right? You want to be able to on ramp your money, understand that money is safe, and you have easy tunnels to access your money. That's really the long and the short of it. Because if you're doing it in this route, you don't have to go to a brick and mortar location for a bank. They're not going to check your credit. You don't have to stand in line and wait for a teller to just tell you what you can and can't do with your money. You have access to your money at all times. And that's the beautiful thing about it. I remember when I first got into this industry back in 2019, I did nothing for 45 days because I was like curious about all of it, but I didn't want to lose money either. So I sat there and I looked for the closest thing that was relatable to me. And that was Aave at the time, because you had the savings and loan. You're like, oh, so I can actually put my money into this institution. We'll call it an institution, like a savings and loan. And they're going to pay me for doing it more than I would ever get from my bank. Because at my bank, it's like 0.025% if I put less than $500,000 in that I'm making. Whereas I can go to Aave, and this was back on Polygon back in the day. I mean, we were looking at 6-7% with incentives. I'm like, let's do it. And at that time, they were actually paying you to borrow as well, because they were trying to get people to use the, just use the system. So somebody said something recently that really kind of struck with me. It's like, banking isn't going to die, but banks, as we know them, most likely in some form will, whether that's smaller banks or just large banks or, that have huge institutions. A lot of the big banks have already made their transition over to these new rails with blockchain using Swift or, whatever else is out there with the DTCC, Canton Network. There's a whole bunch of different groups that have already had technology they've been testing for years, and they're already there ready to bring it to their customers. So as a market participant, the one thing to remember is that, with regards to adoption, we're still early. I mean, there could be a brand new standard tomorrow that isn't anything we're using right now. So just keep an open mind. If you're doing self-custody, keep your money safe in a cold storage wallet until you want to use it, and go with well-researched entities.
Yeah, I think when it comes to banks, well, you see, in Canada we only have 5 banks, right? So they're pretty much already kind of moving. They're having to adapt. I think in the US there's a lot more smaller banks. I think you're going to see a big consolidation into more big banks, and the other banks that exist will be like subsidiaries of the other big banks. That's kind of what I see happening, and you kind of see that with all the boom and bust cycles we have in our the business cycle. Is you do have bank collapses. Silvergate, it was a Silicon Valley Bank and all that kind of stuff that collapsing. I think you're going to see that, but I'm seeing the rise of look at Robinhood in Canada. We have something called Wealthsimple, which is
Simple. I was going to say about that. Yeah,
same idea, and you're starting to see the rise of this, where you can literally put your paycheck into there now, buy Bitcoin, buy stocks, have their own debit cards you can use. It's just like a bank account. You're protected by FDIC insurance for your cash balances up to like $1 million, which is actually pretty impressive. And now you can also earn on stablecoin and Canadian dollars. So like, I think this, like, from your phone doing any finance thing 24/7, that's the future. My generation, like millennials and younger, will probably be more familiar with this. My parents are never going to use this unless they have to, and then I'm going to be the one teaching them how to use it. But it's like, I look at crypto and mass adoption particularly as like options for everybody. Yes, the banks will still exist because there are some people that just feel comfortable going to a bank, but I think more people will move to digital, and then there'll be smaller banks. And you're already seeing it. Like, you go to the bank now, there's like one teller. Like, there used to be 4 of them lined up, and now you see one teller, and they barely even do anything. You got to make an appointment to do all the other stuff. So it's way less employees there than there were just like 5 years ago.
Yeah, and if you think about just the idea, like I think about this all the time. My kids have no idea what an email is. Most people these days with new banks, they're not going to know what a money order is. They're not going to know. They don't know how to write a check. Most people don't even write cursive anymore. So
I know.
it's just like, it's crazy that there's going to be all these new ways to, just to hook up whatever you're paying for digitally. In fact, I think I wouldn't be shocked if there becomes a meta for service brokers, right? So we're going to see a rise in service brokers who actually can consolidate most of these payment services into one thing. Like they take care of it for you. There's a Brahma has Swipe.fun, and they have a technology there on base where the agents will just spin up a virtual debit card for you and pay whatever that you need, using that type of thing. And I think that could be like the future of where we're going to, is that, even with AI agents, right? Because that was the thing today from Google's I/O, their keynote, is that agents are the new UX. You don't have to worry about user experience anymore because your agent will take care of most of that experience for you. So it's like, program the agent to do exactly what you need to do. Program it once, it'll continue to do it without human error for the rest of the time.
It's funny you say that. So at work, I have like I'm an automotive mechanic, so we call the dealership sometimes to like book a car for service that we can't do at the shop. And one of the I think it was Kia. We called the dealership, and you get an AI like person thing now, right? And I'm telling you, it is way more pleasant now dealing with the AI than dealing with the actual person, because you get through, it tells you what you want. I just ordered a Starlink for my trailer up north, and I called customer service and talked to AI. Yep, I got you. We'll schedule a call back. It was so seamless. and they got my call back. Like, it was so efficient. I was like, this was pretty nice.
Yeah, we have one actually for Beacon for our onboarding agent, when we have call setting and stuff like that. They talk to a very well scripted agent, I guess, and that's built into. We use Go High Level for what we do on the back end, and that's just a service that's readily available to anybody who's trying to have some sort of business like that. If you need to outsource or just have something for customer service, you'll be surprised at how people are willing to talk to AI now, even though everyone's very apathetic about AI.
You know what the nice thing about AI is? They never have a bad day.
They never do.
They're always pleasant.
Can I FUD these agents AI? So like, listen, my son had to get a cavity filled, and he goes to a big person dentist, so they referred us to a pediatric dentist. They were supposed to send his x-rays over before. They didn't. So while I'm there at the appointment for an hour, I call, and it's an agent that picks up. I'm on hold for over an hour. It just keeps cycling. I'm like, can you let them know this is urgent? Like literally just an hour of a loop. The front office called, try to we have a long way to go before these are functioning systems. And probably dentist office, granted, I'm going to say maybe their IT departments aren't the sharpest in the world, and probably Beacon, Defi, and, crypto native and, more tech native companies will have better success with it. But I cannot tell you how frustrated I was with that experience. And that's going to be a lot of people's first introduction to AI agents. And they're going to be like, what in the heck is this? Take me back to the olden days. Dial me up the operator.
Oh yeah. That's my dad right there. Like, my dad would not want to deal with that. He doesn't even want to buy an electric car. He's still like, I want a gas car and all that. I'm like, how's the gas prices treating you with your big F-150? But yeah, it's different. I was on a space today about talking with AI with the Genzio crew, and I think I'm a big fan of the book The Fourth Turning. I don't know if you're familiar with it, but we're in basically a fourth turning right now, which is like the end of the previous regime, and it ends with a bang, and we're kind of seeing it now. Usually it's wars, and we're seeing a war right now and stuff like that, and you see this. We have something really neat going on, because you have the upgrade of finance via blockchain technology and crypto and AI, artificial intelligence, and you're merging at the same. You got all these technologies merging at the same time, which brings on the after the fourth turning ends with a big bang. So whatever this war ends, the escalation or the finale of this war ends, and the new regime comes. And I think that's where AI and the new world of finance takes on, and that's where we go back to first turning again, which is abundance. We live in a world of abundance, and I think that's where AI is going to be, bringing us more productive, have higher GDPs, and makes everything cheaper, because technology is the only thing that is truly deflationary, and things get cheaper with technology. So I think that's where we're gonna have a lot of displacement of jobs and a lot of turbulence. But I think that I don't know whether it's 5 years from now or I don't know how long, but I believe we're going to live in an age of abundance pretty soon with AI.
Yeah, I think the key to all of this, and this is kind of a revolution that needs to happen itself, is that the revolution of self-hosting. Because right now, all of our data lives in a cloud, right? Once we get to a world where we actually have access and can own that data, which is kind of the dream of Web3, right? Is where we own our data and we get to choose where we license and use that data, as opposed to opting into everything and all these marketing partners hit us. So once that actually turns around, where we own our data, and then our agent or whatever system we have goes out and takes our data, needing, for example, for Mick's son needs something for his teeth. The agent goes out, queries a whole bunch of pediatric dentists and say, this is my client, this is the issue there, it's an urgent thing, who can take us right now? And then they get an answer right away. Right. That I think that we need to get to that point. But as you said, I think there's a whole lot of the system that needs to break down.
Yeah. And how do we explain that long-term vision? Because that's where I think people get stuck, right? They are so focused on the financialization of crypto that the second you try to talk to them about how it's going to make the world a better place, they're just like, all right, shady car salesman. Yeah, sure. The odometer is not rolled back. I mean, whatever. That's just like the defense mechanism to every new technology. How do we craft that vision for the world? I remember the Coinbase commercials during the football. I thought that was really good, when the woman was going to the bank and they're trying to get funded and just showing like, this system doesn't work anymore. Like, at least we're trying to build a new system. But then you have the, not going to name names, of the world of crypto Twitter that just continually discredit us as an industry. When are we going to start self-policing, or like hire a police department, the crypto police department? Chris, will you start that?
I would love to, but that would require a little bit of a paradigm shift. Because I think the other part too is we're all like free market, free market, free market, until an exploit happens. They're like, centralize that right now so that nobody else can do that. And it's just kind of like this.
Fair.
Yeah, you're just like, like the whole Aave thing. It's kind of crazy that Aave was able to fill that hole with the RSE's backing going away in less than 48 hours. I mean, I want people to understand, it's amazing that we had DeFi United and stuff like that. That's not going to happen for any other protocol in this space. Why? Because there's a couple things that have to remain true for DeFi to advance. One, nothing happens to Tether, and the other is nothing happens to Aave. And once you have that, and we had a little bit of both in that, right? So if something happens to Aave and something happens to Tether, a lot of things crash, because USDT is the major, partner for trading pairs on the majority of non-US exchanges. There's a lot of different things that can go down if one of these big centralized entities, we'll call them centralized entities, go down. And so there are some things in DeFi that are too big to fail. But if we look at what's been going on now, like even with Thorchain, even though it's been looked at as a place where people go, it's very credibly neutral. And then it got recently exploited. Now they're down 10 million. They're like, well, what do we do about Thorchain? Like, this is what you guys wanted. This is the self-policing that that we wanted. The problem is that we're in a situation, at least with the world, where DAOs and governance don't really work well. I have yet to see the DAO model work really well, outside of maybe like with MakerDAO and SubDAOs, where you have smaller groups that come together to try and create the common good, right? There's that. But the problem is with DAOs is that it's a plutocracy. It's all about who has the most tokens. They're going to have the most power.
So that's where I think like AI can come to that. They take because we as humans are flawed, right? We have greed. We have the potential to do good as equally as we potential to do bad. So if you take the human out of it, you take that underlying problem out and just program what you want the rule set to be for this protocol, and let the AI do it without emotion and just do it properly, because maybe just something that humans shouldn't be doing. And then you can have your votes and stuff like that, but everybody should be equal instead of like who has the most shares and stuff like that. If you have, a board of directors, everybody gets a fair vote, right? So I think you have to, I think a lot of problems with a lot of protocols, and not even just DeFi, just like, projects and everything, is just, it's a human problem. Either you manage money terribly, or maybe you get to go too risky, like, with, especially with, back in FTX and all the, like, this is what happened with me with yield. Like after FTX, it put a really bad taste in my mouth with yield. I stay away from it, because honestly, like I'm happy with the rate of return on Bitcoin, right? Like, when you look at it through a traditional lens, like, getting 700% is pretty damn good. Like, you know what I mean, from a bear market compared to, like, traditional. Mind you, you can obviously do much better in altcoins. I'm not saying, not putting shade on them. I'm just saying that, like, we got to ask ourselves, where are they getting this yield from? Because that was the big question. Is because, like, for example, Celsius was making like 13%. I was making 12% on crypto.com back in 2021. That was great. But I was like, you don't ask these questions because you're making all this money, but when everything fails, it's like, well, how did they make this yield? Like, where are you getting the spread from? So do we have, like, at least with things that you're working with, or is there some transparency of how they get that yield, therefore, so people know, like, is this, like, when I look at a dividend stock, I look at it the same way. Is this yield sustainable?
Mm-hmm. That's the question most people should be asking, right? Because if you don't know where the yield comes from, where does it really come from? It comes from you. Yeah. You're the yield. So, one thing that we talk about specifically with our group is that volume equals yield. That's the main thing that we push in a lot of our content. So a lot of our strategies these days come from a couple different places. One is doing single-sided supply. So just supplying at places like with markets, kind of like Camino, Morpho, Euler, Aave, Tidro, things like that. And then the other part is through fixed rate farming. So Pendle, for example, where you get in, especially on the PTs, which is what we normally talk about. We call it a DeFi CD. So are you familiar with what a certificate of deposit is?
Refresh me. I have a general idea.
So the best example I have for a CD is like a Christmas club account, right? So you go to your bank and, like, hey, we have this Christmas club account. It starts in January. You put in $1,000, and then you get roughly, it's normally a 9-month CD. So it's just a rate of like 2.75% for 9 months or 10 months or whatever. And then you get that money back in. You get that money back in October, and you've earned 2.5% on it. You're like, oh, that's great.
That's kind of similar to like a shorthand loan or something like that.
In a way, yeah.
Yeah.
So Pendle's the same way with their PTs. Because what they do is they give you what's called the PT, or a discount, like a coupon bond of what a coin would be worth after a specific amount of time, and that's where their maturity date comes from. So if I have one, for example, and we like to really just push in our content all the stable coin ones, because we're just looking to make sure everyone's making between 6 and 15% at around a comfortable rate. Because for most people with size, that's fantastic. That's all that they want. They don't need the 1,000% on big risk things. They'll go after them, sure, but the majority of their funds are in long hold assets and stable coins, and they're looking for the best way to get reliable yield that they can just kind of set and forget for 3 to 6 months, and then come back and then reevaluate their position. So that's why we like Pendle specifically for that, is that you're not locked in at any time. You can hold it all the way to maturity, and if you do, you get whatever it is the rate that you signed up on the day that you were in there. Otherwise, you can always withdraw at market rates. So if you got in on, let's say, Hype, there's a Hype PT out there for 6 months, and you got in at, let's just call it 8%, and then a week before it comes due, it's up to 14%. You can withdraw and get 14% back on your money because you're withdrawing at market rates. So there's a lot of really great things about Pendle that we really like, and what we call fixed rate farming, or we call our DeFi CD. Mm-hmm. The other way is with just DeFi savings accounts, as we call them. They're just single-sided supply. So if you go to, like I mentioned, Camino, even other places like Moonwell, Tidro, just DEXs, just supplying stable coins, earning between 4 and 14%. Some of them have better strategies with multiply, so you can actually do leveraged looping with flash loans, a lot more degen. But depending on how utilized those are, you can get anywhere between 60 to 360%. Again, nothing that we specifically push in a lot of our community. It's just there, and we're making you aware of it if it's available. So, and what's great about some of these newer spots, like if you go to Save Finance, Lulo, Solayer, I'm just naming some of the Solana ones, but there's a couple on Base. Moonwell has a card as well. They all have crypto cards that you can use to specifically draw against your funds that are in there. So we have a lot of members in our group who specifically just do stablecoin farming like that, just to pay their capital gains taxes.
Yeah,
they'll put a little bit of size into something that is just getting them that 6 to 15%, and then just taking the profits from that and paying their taxes every year with it. So when it comes to what is a winning strategy for you, it doesn't have to be the 10,000%. Those are always great, of course.
yeah.
But in terms of what we recommend to our communities, it's always something we're trying to be as safe as possible, because safety and security for a lot of our group, because a lot of our group are older, is critical. The other thing that we teach is concentrated liquidity, mainly because we believe in the power of profiting off the behavior of other investors. And normally concentrated liquidity will pay you a yield based on the getting a piece of swaps between two assets. And it's a great way, especially on things like perp dexes that have them, which is why we like Hyper EVM, which is why we like other chains that have these mechanisms. It allows you to not have to worry about PvP type of trades. Are you hitting your numbers? Is your fib good? Did you put a trailing stop or a stop loss on this trade? You can just profit off of all of them by being in a place like Meteora or other spots that have concentrated liquidity and profiting off the behavior of other investors. And in some cases, like at Camino, you can also auto compound those profits to earn even more. And that's really the strategies we really push.
So I gotta ask, like, with on the topic of yield, so with the Clarity Act and the new amendment where you can't earn yield on just simply holding stablecoin, these things affected by? Are you, because you're not really just holding it to make a yield, you're doing something with it to make a yield. And I think the things examples you just laid out, right?
Yeah. So the clarifying point for Clarity is that's really, in my opinion, more towards what you'd find on a CEX. So the Coinbase issue was they just wanted to allow people to just hold USDC in their Coinbase account and earn 4%.
Okay.
Now they're going to reword this because the whole crux of the argument was that they can't call it yield. They're going to have to call it rewards. So, and they wanted rewards based off of activities. So does this mean that they may possibly change the mechanism so that if you have over a certain amount that you have to lock it up for 2 days, which I think probably a reasonable ask for.
That's kind of what crypto.com is doing. Like you have to lock it in for a certain amount of days, and the more you have, the less yield you make.
Yeah. And that's kind of, I think, what we're going to see from that standpoint. But for the most part, at least from the protections that most people were looking for, overall, DeFi operators they're exempt from a lot of the different legislation that's being put out there in the Clarity Act. Now, if you're an airdrop, that's the one part that's an issue. We may see a decrease in airdrops because of that. You may see a lot of, well, I don't know what we're going to see, because people are doing a lot more points farming and stuff like that, as you guys have seen a lot of that.
And there's actions to get those rewards. Yeah,
exactly.
It's going to be a really interesting gray area because you did earn it, right? Technically, you had to do tasks. Jump through a couple hoops. Mick, are you still here?
Well, I think the way some people are working around it, I just remember talking to Jordan at Reply Corp, is they're doing kind of the Web2 strategy where the points convert to gift cards and just do very valuable gift cards that are very desirable to people. And instead of giving them tokens, convert the points directly into gift cards. So I'm sure we're a creative bunch. We'll figure out a way to get around these laws until they're like, we're inevitable, and then we have to fight big court battles. The problem is we have to get big enough and have enough money to fight those court battles, because right now we're Wild Westing it and trying to find every little, nook and cranny that we can take advantage of to make these businesses work. And it's like the government is obviously working against us. They would rather own, the centralized crypto as opposed to letting it exist in its purest forms and its intended forms. So, I've been listening, Mike. You guys are just really smart, and I kind of am enjoying. I don't listen to a lot of security stuff, so I need to level up. Basically, I work in DeFi. We get hacked all the time. So
I can't see your hand, so I didn't know if you had a question.
it's true. I don't even know how to raise my hand in here. The last time I tried to turn my picture on, I left the studio. So doing pretty good over here.
Awesome. Well, so tell me about staking. You guys do a lot of work into staking, because I know that's something I've been looking at. Like, so I'm obviously looking at multiple revenue streams. Like, that's my goal. My goal is, excuse me, financial freedom, and my investing through capital appreciation in my crypto, and then on top of that, I'm looking at, I just bought 2 miners, so I'm back into mining again. Mining was a great way for, if you want to build wealth, mining is the best way, in my opinion, to have a good tax advantage strategy, because you get the same taxable benefits through mining than you do as owning a rental house, and you don't have to deal with tenants, especially if it's hosted. It's even better.
Yeah, that's true. And especially if you kind of split it up, so you're doing solo pool mining for Bitcoin as opposed to shared pool mining. I mean, we've had almost 4 people in the last 12 months actually hit a reward block with a solo pool.
I got a solo Satoshi behind me, and I got a little USB over here.
Yeah, in fact, I just if you check on my X page, I posted about a specific unit. It's 10 terahashes for $700. Which is from, I think it's called Block Street Boys, I think is the name of it.
That's awesome. I gotta buy one.
Yeah, check it out. But for $6.99, that's not a bad deal, all things considered.
It's a lottery ticket that plays a lottery every 10 minutes.
Exactly. And if you just happen to take your resources and do half solo and half shared, I mean, I can't see a situation where things go wrong. And the great thing is with Bitcoin mining, with the way that just with the different proof of work frameworks that are out there, you can mint multiple coins.
Yeah.
You can do layer 2 Bitcoin stuff. You could do Caspa. You could do, all the kinds of different
there's
proof of work that's out there.
There's a website that I used to use. This is actually how I made my my XRP bag. Is I was mining some crap coin. It was a CPU mineable coin, but it was making all right. I was doing okay, but I would just convert it to so there's a website called Unmineable that you can mine an algorithm, and then it'll just pay you out in the coin that you want. So I was mining XRP, and that was one of my best performers. I didn't have a huge bag of it, like not crazy, but I was mining it at 36 cents in the bear market, and okay, I was turned out to be $500. I was okay. I know it was one of those things where you can put a little bit of hydro power, electrical power into that. You deduct your expenses, your electrical bill against your taxes. I know for me, I'm still a 9-to-5 worker, so having these expenses have allowed me for the last 4 years, I've been getting credits back on my taxes, which I take and just buy more Bitcoin or buy more crypto, and I compound those returns. That's how the rich people do it. That's how the wealthy build wealth. It's using legally the tax system to your advantage. It's there for you to use, but you have to know how to use it. You got to put the time and effort into learn it, because your biggest hurdle in creating wealth is taxes. So if you can mitigate that, you just get to where you want to be faster.
Exactly. And you kind of have to understand, if you are in a position like that, understanding which services you're using are required to report. So that means you also need to report. Yeah. Because one of my favorite mechanisms that's out there is NFT staking for property management. One of my personal favorites, because it to me, it makes the most sense, right? So there's a couple of different projects that are out there. I'm just going to call on AXNS, I think is what they're called. They're on CoreDAO, which is an alt layer 1 BTC coin, NFT marketplace through blocks. And they've gone out to different really well-performing apartment complexes that are near military bases, and they offer fractional ownership of the apartments that are there. And they own the property management company, so they actually can, you buy, NFTs that are either fractional or whole ownership into some of these actual apartments, through an NFT, and then you get passively, I think it's 7% or something like that.
Now it's their NFTs or just a kilometer. You can buy whatever NFT you want.
No, it's through their NFTs. Yeah, because the
Okay.
NFTs themselves are from an actual apartment. I mean, they're just the pictures.
So they can
are
determine the
apartment
value. Yeah. Okay.
Exactly. Yeah. So I think this is something that could definitely lead to other things. I also think, because I know in the state of Texas, they have a specific car loan market where anyone can go and bid on debt or something like that. So someone actually going out and creating car loan NFTs, working with dealerships, like even third-party dealerships, that could be really lucrative in my opinion, because if they don't pay, then you get a judgment against you, you get all that back. So I think there's a lot of fun ways to work into the non-traditional ways that people will structure finance, that DeFi overall through various mechanisms can really provide some really interesting ideas. I, for one, am looking for something like that. So if someone wants to build a smart contract loan aggregation company for non-traditional ways to get loans, I'd totally get into some tranches on that type of stuff, because that type of stuff I think is that's never going away, because that's like one thing, right? Because you're looking at some of these DeFi projects, you're like, that's cool, but what if something happens and those things go away? If you use like tangible RWAs or other types of assets that are never going away, then you've got something that's evergreen. And that's really the type of stuff that I think from an adoption standpoint will bring more people in, because
you're right.
They're looking for other things to do, and they're like, oh, I had no idea that was a thing. It can be if you're doing it in DeFi.
Oh, look at Ticketmaster. How many people are using NFTs right now? I don't even know about it. It's like they've been doing it for years.
Exactly.
I've said this for ever since I've really started chatting in crypto, is the JPEGs were just like the beta tester of what an NFT is. That's such just scratching the surface of what an NFT could be. Like the deed to your house, your driver's license, your insurance card, anything that's on paper will essentially be an NFT in a digital wallet, and you'll just need a device like your phone, or essentially it might even be a neural link in your head. Like, you know what I mean? Like you're gonna have it's just going to consolidate, and that's kind of what technology does. Like, I talked about this on the space today. Is like, your cell phone has now replaced 100 years ago a building of people that just did mathematical equations. Your calculator app now replaced an entire building of people. There's no more switch operators, connecting your call anymore. Like, you know what I mean? Like, you're seeing that, and with everything we've talked about, AI and all that, you're going to see this new shift of some jobs just don't exist anymore. But
that was my dream job, by the way, my telephone operator.
You want to be
dying to get in there.
How can I connect your call? Give me one moment, please.
A little lower stress than working in crypto, I'm thinking. Maybe not. I mean,
you only have two hands. That's the problem. If you had more than two hands.
Fair. Well, Elon's going to solve that. We'll probably have like 7 arms, 2 brains. Like, I don't know. We're going to look pretty crazy in 20 years if he has anything to do with it.
Can you imagine connecting the wrong call? Like, you get two people.
That would be so me. I would do it just to be funny, though. Like, oh, this guy sounds cool. This lady sounds cool. And I'd ask them both, are you guys single? And then just be like, listen, you guys are both single. I'm sensing a vibe here. I'm just going to leave you to it. And then I'd probably be fired within a couple of days, but it would be a really fun story to tell.
Absolutely. Do you have any questions? I know we're getting close to the top of the hour. Do you have any questions for Chris?
I mean, none more that I can think of. I want to applaud what you guys are doing, because there just isn't enough. And I'm one of those guilty people in the space. And I wouldn't say guilty, like, we all have our roles that we play here, right? And like, if you're focused on marketing, you have it's so much to learn for each kind of area of this space that it's hard to get deep into security. But like, we're the ones showing the people how to use these products. We should know security as well as the best of them. So people like you, people like Michael K, who have been on the timeline preaching, keeping yourself safe, how to keep your Twitter account safe and from getting hacked, like all of those things, make security sexy again. Because if not, like, these DeFi hacks are what's going to happen. We all want to just look at the bull case, and it's human nature, right? It's never going to happen to me. It might happen to some other guy, but I think history has repeatedly proven that that's not the case. Like sometimes it will be you, and are you ready and prepared for those consequences if not? So
Yeah.
I'd love to help supporting you guys scale, whatever we can do. Let's get on some more podcasts. We should get you on our trading hour sometime to like Giga Brain with Jose on all you guys' smart technology stuff, because I know that's a big area of his focus lately too. So I'll see what I can do there.
Now, when it comes to security, it's no single point of failure. That's the most important thing. I got hacked. I got wallet drained when I was playing big time the game. But I only used that wallet just for that game. I just moved money in and into my wallet. So it was, I lost some money, but it was, it was all free money from the game. Money I earned in the game, so it's fine. And that was it. It was isolated to that one wallet. Never used that wallet again. Created a fresh wallet, and off we go. Right, and the most important thing to creating wealth is being in the game long enough without getting wiped out.
Yeah, knock on wood, I've yet to be drained. So I'm hoping that stays the case and I keep going, because it's 15 years now that I've been in this industry. That I hope I never get drained. I've been rug pulled, sure, but it's never been to the point where I actually got drained. But ultimately, I think the key, and this is something we teach in our content a lot, the most powerful tool you can have in your arsenal is a routine. And having a routine that you do weekly and even quarterly for security is going to be key. At this point, we're telling everybody the moment you do a position or any type of DeFi transaction, go and revoke that approval immediately. You should never be using a wallet that doesn't allow you to specify specifically the amount that you're going to approve on a transaction. If it doesn't, and I'm looking at you, Coinbase wallet, then you don't use it. There's multiple wallets that don't allow that to happen. Now, there are some great wallets out there that I haven't tried yet. I know Ambuyer is on the list for me to try, that has a lot of really cool consumer-facing type things that go backwards. But for us, looking at wallets that are just easy to use, easy to read, and easy to navigate with all of the bells and whistles is why we recommend Rabby for the majority of our EVM, based type of stuff. The other thing I could definitely just say from a routine standpoint is I would definitely say if you're not rotating your master, rather your seed phrase, and your master accounts on a password manager regularly, you should probably do it now. I don't think that there's any reason you should have an older wallet longer than 18 months at this point, because we saw recently a drain where random Ethereum wallets were being drained. They were 48 years old. So maybe there's a case where someone got access to maybe a key generator or something like that. Looking at what I know from, people in the space that I respect at Seal, for example, they're still trying to figure out exactly what that is. But as long as you make security difficult or annoying for you, then it's going to be annoying for someone who's a bad actor looking to exploit you, because they're never going to go after anyone with decent security. They're going to look for people who have no OPSEC whatsoever. So making sure that your operational security is at least started and difficult and annoying will serve you really well here. If you have a hardware wallet that you're using, because people ask all the time, what hardware wallet should I use for cold storage? Whatever you want. Because as long as you have access to it, it's at least EAL5 plus certified. It should meet all the bells and whistles that you need should something ever happen. You should treat cold storage as cold storage. So if you have a ledger that's just cold storage or a Trezor that's just cold storage, do not connect it to a blockchain in any way, shape, or form. That's where CEXs still work well, because they're a great on-ramp and off-ramp point for your hardware wallet. So that would definitely be one thing I would recommend. And then just wallet separation. We're in an age now where if you go into a new protocol, they'll make a wallet for you. So making sure that you keep track of the number of wallets that you have and just try not to intermix them. I know it's annoying, but security is meant to be annoying. Those are the big things that we preach with regards to OPSEC, is just knowing what you sign, wallet separation, and making sure that you isolate your risk. And those are all the things you can do. Like, don't use the same browser for investing that you would use to read your email. Never do that. Never do that. Use profiles. That's why they're there. That way you can have nice little sandboxes between different activities that you do. Yeah, there's just a bunch of things that we would recommend that are once you're like, oh yeah, that makes sense. It's crazy how much security is commonsensical. So just keep it common.
You're right. You gotta be diligent. Don't get lazy with it. Absolutely. I'd be honest with you. Like for me, like when I sell the top of the market, like that's it. Everything's in cold storage, and I'll see you again next bull market. Like, that's it. Like I don't. I use things for like certain platforms for swap, but honestly, this bull run, everything stayed in the cold storage wall. Only when I went to sell did I took it out and it went right back in, and that was it. And you just sit on it. Now, you said rotate your seed phrases. Now, should I be rotating my cold storage seed phrases, or are you talking about?
I would say once every at this point because of that train. Well, no, just to be prudent, you may just want to do it once every 5 years. I mean, it's not the worst thing to move money between accounts. So I would say just as the biggest issue right now is quantum preparedness, right? And we haven't even touched that. And there's a whole lot of quantum things that are going to happen. We're going to have to move wallets anyway. To post quantum compliant addresses with that type of stuff anyway. So, I mean, I would say with what you have now, unless you have a wallet that's more than 4 years old and you're just waiting for that MetaMask airdrop to drop and you're going to be totally set, there's no real need, I think, to keep old wallets. Move all your dust to something else and just keep it safe.
Very generous of you to assume that we will actually ever get a MetaMask airdrop, Chris.
I am holding. Declan Fox, I love you, man. We're gonna do this together.
Please.
Let's go.
Help me out, Joe.
The space needs it. Well, good show tonight, guys. We need to do more of these serious, like educational talks. This was an interesting one. Normally I tune out because of, like, security is not sexy, but it was, I think, in the context of what's been going on in the space. And now that it personally relates to me and DeFi, I care, right? We never care until it like might directly affect ourselves. So yeah, just spreading that message that like it can happen to anybody. I also have fortunately never been drained a wallet, but I did have a Discord hacked that led to a hack of a community, and that was early in my days when I was like, yeah, nothing's gonna touch me. And it's like the stupidest things will get you. And the smarter you get, the smarter the criminals get. And it's always so frustrating to me because I'm like, if they would just use their powers for good, like what could society look like? So F you guys to all the scammers, I guess, to end the space. Chris, it's been great having you. Any final thoughts, guys?
I'll just say thank you so much for coming on. I appreciate you spending the time to chat with us. This is right up my wheelhouse. I love this stuff, this kind of chat. Honestly, this is kind of what my platform is. My platform is also education, trying to like the 9-to-5 worker, showing that if I can do it, you can do it, and how to build wealth in the modern era. And this is it, like the blockchain technology, DeFi, like this is how you make money in the modern era. And like you said before, we are so early still, so very early, and you want to get educated as soon as possible. So so you can take advantage of being early.
You could say that, but my dad's also up over 100% on his stock portfolio. So this has been a tough year for me to make the crypto argument.
You're right.
I mean, you really just need to make sure that you have a diversified portfolio, right? Nobody needs to be 100% crypto. No one needs to be even 75% crypto. You should have a really good, well-diversified portfolio that represents your interests. Like I have a budding dividend portfolio from the aristocrat list that I'm a big fan of. And, the idea that, you can keep building wealth while you sleep is something that's really in my wheelhouse, right? Big news today, Andre Karpathy, co-founder of OpenAI, joins Anthropic, which is kind of a crazy thing. He actually, is a huge proponent of education as well. He says education is not a side quest. So one thing that I would say as a final thought is, if you're a protocol out there, don't sleep on educating your users. Do not assume that they know what to do on your protocol. Work with groups that are educating people, making sure that they can get educated eyeballs to your protocol. And keep education at the front of the mind, because marketing is only as good as the people that are educated to actually take advantage of it. So That's all I really wanted to say. Feel free to check me out
Awesome.
on our weekly podcast, Total Value Locked, Wednesday, 1 p.m. Eastern, and our Beat the Banks training, which are free community training every Friday, 3 p.m. Eastern on my socials.
Awesome. So make sure you guys send him a follow, smash the like button. I appreciate everybody for tuning in. I appreciate sitting down and having this conversation with you. And we'll see you guys in the next episode of the Adoption Pod next Tuesday. Thank you guys. Take care.
07, guys. See ya.
Yeah. Turn it up one more time. You already know what it is. Yeah, yeah. Yo, we back at the end. Yeah, that's wild. And the episode down, added to the file. From the stories to the laughs to the real talk too. You pulled up, press play, let us ride with you. Woo. Crypto convos, guests from everywhere. Big ideas, real voices in the air. If you made it this far, then you already know we're building for the future. Watch adoption grow. Let's go. This is Adoption Pod. Yeah, yeah. Thanks for watching, y'all. Thank you. Hit play, hit like, hit share. Click, click, click. We'll be right back, right there. Adoption Pod. Yeah, we love this squad. We do. To the next low drop. Next one. Keep the fam love running non-stop. Adoption Pod. Shout out the parents, the kids, the crew, the ones in the system. Yeah, we see you too. Every voice, every journey, every I got through. You the reason that we do what we do. From the first time listeners to the day one strong. If you learn one thing, then we did our job. Mass adoption, one combo at a time. Tapping next week, yeah, you know the vibe. This is Adoption Pod. Yeah, yeah. Thanks for watching.